I want to read to you some commentary posted by the PBOC on its website. This happened in just the past hour. We managed to get the translation of this. This is from Central Bank Governor Yi Gang. The translation reads, as a responsible big country, China will abide by the spirit of the G20 Leaders Summit on the exchange rate issue, adhere to the market-determined exchange rate system, not engage in competitive devaluation, and not use the exchange rate for competitive purposes. What's your take on that?
So I think China is trying to create friends around the world, the EU, Japan, and so forth. This language is a part of that, building alliances outside the U.S. So I think the bottom line is that they have allowed this move. They have a heavily managed currency. So every time you have a significant move in the currency, it's because they're allowing it to happen. Whether they are spending currency reserves, actually engaging the market, is a bit different. And as I said, our models overnight actually detected that they smoothed it in the other direction. So this is like how they're fine-tuning it and calibrating it very precisely.
Can I add one thing to this, which I think is important, which is central bankers around the world have a very high regard for the technical expertise inside the PBOC. Right. A lot of these guys are foreign-trained, PhDs, other places.
The fight is on. President Trump is clearly awake. You want me to tell you what's going on Twitter here? Donald Trump, President Trump, talking about China. China dropped the price of their currency to an almost historic low. This is what he just wrote literally 46 seconds ago. It's called currency manipulation. Are you listening, Federal Reserve? This has been the conversation we've been having right here. This is a major violation which will greatly weaken China over time.
You should say you're
listening. Good morning, Jay Powell.
Treasury Department.
I think that's an important point. Now the President can continue to say this is the Fed's decision, which it is, because if you want to have an intervention that works well, you've got to drop rates. But as Yen said, the Treasury has this stabilization fund. It is, I believe, the Treasury Secretary's authority to act to use this with the approval of the President.
But getting back to Yen's point, I mean, even if they use that fund, is there enough dollars in this fund to make a difference in the price of the dollar?
There's $22 billion. It's a minuscule amount compared to what it takes to move the dollar on a global basis. It's only going to work for a couple of seconds. So this is something that requires a much, much bigger commitment. There's the technical difficulties. There's even like issues around, does the U.S. really want to buy a lot of Chinese government bonds and signal that the Chinese currency has become a reserve currency? This is a very, very
we're
tricky
a little bit
issue.
a little naive here. I mean, I think the president has gotten himself into the middle of a knife fight. I called it a poker game, now I call it a knife fight. And he's gotten in deeper than he wants, and he's fighting against a formidable adversary. I think you asked the question, Andrew, before about the Democrats. I think, as we've seen so far, I think the intelligent Democrats would sit on the side and watch the knife fight going on and see where it goes before they go out and stick their neck out.
I mean, I think the question is, does President Trump, does he think he's in a knife fight when the Chinese have brought guns? And so, Jens, I go to you, and, you know, you've been talking to traders overnight who've been actively trading all sorts of crosses around the world. Is the bet just basically a stronger dollar from here, that the dollar will, in fact, go higher?
So who wins in a currency war? The answer is bonds, right? Because everybody have to buy some bonds, and all the currency effects are eventually going to even out. So bonds are rallying and makes a lot of sense, and that's really the world we're in. The bond market to watch is the Chinese bond market, because what might happen is that now they're allowing their currency to move a bit more. They might actually have more flexibility to move their own monetary policy because they don't have to target a specific exchange rate. So we could see a big move in the Chinese bond market that's going to give further fuel to this bond market rally we're seeing right now.
Hey, Jens, point of information here, and this is, I think, I don't know how much people want to know about how to intervene, but let me read you a J.P. Morgan report here. I guess this is how to intervene at home, but it says the Exchange Stabilization Fund of the Treasury is $96 billion, and you're exactly correct. $22 billion in dollar cash, $51 billion in SDRs, the special drawing rights, $13 billion in euro and yen. Can they sell the SDRs too in order to intervene?
Would that make a difference?
They can potentially do some conversions via the IMF where they boost their firepower a little bit, but 22 billion or 70 billion,
It's still a drop in the bucket. Is still the issue here.
I think we could also look at the president's tweet and say it is just consistent with his pressure on the Fed to ease more. It doesn't necessarily mean, as I command the Treasury Department to do something, to Fed. It's just, we need easier policy. This is another way to pull that lever.
That tool is lessening every day.
Sure.
I mean, there's not much more he can do.
But there's also value, perhaps, in having a foil and saying, if not for the Fed, things would work out.
But let's follow through what Jens said. If bonds are the place to be, while the U.S. government tries to weaken the dollar, how do you buy U.S. bonds? I think you need dollars to do it. So wouldn't you have a conversion? You definitely sell stocks. That would be one way. You'd use your existing assets. But you would sell foreign currency to buy dollars, to buy bonds, which would strengthen the currency.
But you mean bonds in general do well, right?
Yeah, like you have Europe is buying treasuries, the U.S. is buying bonds, everybody's buying bonds from each other, right?
Right.
And if everybody's doing the same amount, then all the currency impacts net to zero, but you end up with a lot of bonds being bought. That's the fact.
But the big question is, we are the reserve currency of the world. Will the world allow us to weaken our currency?
Absolutely not. That's the key point. And
so everybody's going to pivot, which means it's a race to the bottom, which means you may not care now. But if there's a race to the bottom, you might eventually care, no?
Oh, eventually, sure. I mean, we're talking about it today.